Hey everyone, let's dive into the numbers behind IDFC First Bank's Q4 results for FY25, delivered claymation style. I'll keep it simple, sharp, and packed with insights. So whether you're a finance fanatic or just curious about what's driving the headlines, you're in the right place. First up, let's address the elephant in the room. Profit. IDFC First Bank's net profit took a bit of a nosedive, dropping 58% year-on-year to Rs 304 crore this quarter. That's a significant dip compared to Rs 724 crore in Q4 last year. So what's behind the numbers? The good news? Net interest income, or NII, actually climbed nearly 14% year-on-year to Rs 7,971 crore. That means the bank is still making more money from its core lending business. But, and it's a big but, the net interest margin, or NIM, is expected to have shrunk. That's mostly because of interest reversals. Basically, the bank couldn't recognize as much interest as expected due to some loans going sour. Speaking of sour loans, let's talk asset quality. Gross NPA, that's non-performing assets, was actually down 1 basis point to 1.87% over the year. Net NPA dropped even more, down 7 basis points to 0.53%. That's a small but steady improvement year on year, though there's a hint of a slight deterioration compared to just last quarter. Now, here's a twist. Provisions for bad loans have jumped a massive 100.8% year-on-year, landing at Rs 440 crore. That's the bank setting aside extra cash to cover potential losses. Combine that with total expenses rising almost 16% to Rs 497 crore, and you can see why profits took a hit. But it's not all doom and gloom. Loans and advances are expected to have surged by 20.4% over last year, and deposits probably grew by almost 25%. That's some solid growth, showing customer trust and business momentum. So what does this all mean for the share price? As of April 26th, the stock closed at Rs 66.15, down 2.19% for the day. But zoom out, and you'll see it's gained almost 16% over the past month, though it's still down over 22% for the year. Looking for context? Just last quarter, profits were also down by 53% year-on-year, so it's a trend, not a fluke. But NII has been consistently climbing, even as NIMs compress and expenses grow. In a nutshell, IDFC First Bank is growing its lending and deposit base, but rising costs and cautious provisioning are squeezing profits for now. If you're a long-term investor, these are the trends to watch, because today's challenges could set the stage for tomorrow's comeback. If you learned something new, drop a like, subscribe for more finance breakdowns, and let me know in the comments what bank or stock you want me to claymate next. Catch you in the next one.